Hey everybody, this is Jim at SP500chart.com. It's 6:30 on July 23rd, 2014. Let me read this to you real quick, and then we're going to take a look at the chart. The website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control drawing lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, first I want to apologize for not being able to do a video yesterday. It simply was impossible. For the first time ever, I was on the road, and the internet connection or something was so bizarre, I could not reach free stockcharts.com, so I had no access to my chart. So here we are. And I'm running a little bit late again, so I'm going to be pretty brief about this because I think this is reasonably simple. First off, we had looked at maybe the last 3 days here as a potential inverted head and shoulders pattern. Believe it or not, I'm going to let up on that. And instead, I'm looking at this as possibly a triangle pattern with a breakout that is either in the process of happening or has happened. You see, we got some resistance today, twice. Got a little resistance there, and we will look at where that came in. Where is my? There we go. Resistance was at right, like a point underneath my 1990 target. Who is messing with me? Well, here's the scoop. We spent the last 3 or 4 weeks essentially going sideways. And we had an underlying support line and an overhead resistance line that sort of makes that look to me like a consolidation pattern. If we measure this consolidation pattern and measure it for a downside breakout, that's where we were looking at a possibility of the 1920s. But now that we have an upside breakout, I think we have to be now looking for a very possible trip over 2000 to about 2015, and that is based upon the height of this pattern right here where we reached that height and then came back down where we then bounced again. So in other words, this is really the first turn in the pattern. This is not a turn, okay? The turn comes the first time you hit resistance and then come back to support. That is a turn. So guys, based upon that, I'm thinking 2015. Now, does that mean that is an absolute shoe-in? Well, considering where we are, no, I don't think it is an absolute shoe-in because we've got some potential resistance lines that we've got to overcome before we can get there. But a couple things happened today that I liked from the bullish standpoint. The first is we got back over this green line again. Matter of fact, yesterday we bounced on it. We are also back over this orange line again. As a matter of fact, today we bounced on it. Not by much, mind you, but by enough to make note of it. So what I would be looking for as a signal that we may be dealing with a significant bullish move here would be getting up over that 1900 and making a good solid run for the 2000s. I mean, that goes without saying. But if we just kind of look at the last 4 or 5 weeks and not get too hung up about, for example, this trend line has its defining points back in 2010, 2011. may not really be that important or that influential here in 2014. It's still on the chart though. 1990, well, that's a minimum target. That doesn't mean we would necessarily expect resistance there. As a matter of fact, we had this line from these 2 points back in June. I'm going to get rid of that line. I'm going to do something that I don't do very often. I'm just going to flat rid the chart of that, and I'm going to do something else. I'm going to go back to the high of June and the high of July, and I'm going to extend that line forward for a bit and think maybe this is a resistance line that makes a little bit more sense. But guys, even if we just look at this little small inverted head and shoulders pattern right here, left shoulder, head, right shoulder, that pattern alone tells us to look for $2,005. So if we have the larger picture of this consolidation area, tells us to look for about 2016. I'm thinking we look for it. So guys, pretty simple. By the way, if we want to add a couple lines on the chart, I don't know that I'm going to do this here, but I'll show you. You might could do this, and if you do that, you may come away with a wedge-ish shape. That's fine, as long as if that wedge breaks down, and what I'm talking about is we would see this as a rising wedge. Okay, if it breaks down, as long as we get up high enough to where we get picked up on support around 1980 on this line right here, then these targets are not in jeopardy. Now, if we come back down and take out 1980, and then also take out about 1970, which is sort of in the center of this pattern, then you might say this could have been a false breakout. But for now, as long as we stay north of this line, I think 2015, 2016 looks to be in the cards from this larger pattern. From this last 4 days, I think 2006 looks to be in the cards. So let's just keep an eye on it together. And let me get this video to you tonight real quickly. Nothing really has changed other than the fact that we are over this line, and we now have it looks like we're going to be, actually should be, taking out 1990. Keeping my fingers crossed that I didn't just curse that. But guys, nice couple of days here this week. Despite the weakness we saw on Monday, it all seems to fit into a little bit larger picture now of a move up. Let's go to the hourly chart. A breakout over this resistance line, a move up, a consolidation sideways, and now what appears to be the beginnings of a renewed move to the upside. So that's your video for July 23rd, 2014. I'm glad I was able to get this one to you. It's nice to be back in town working with reliable technology. So thanks again for your support, and thank you for taking time out of your day to watch this video. There'll be another video tomorrow. Be sure to look for it. Thanks again.